So much is going to be happening this upcoming week. I thought that I would talk about some of the most popular stocks of 2025 that have pulled back anywhere from 20 to even 30% in just a few days. So I really hope that you guys learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. The first thing that I want to share with you guys is the stocks that we talk about today. Some of them are actually going to be reporting earnings this upcoming week, and as soon as Monday. There is also Nvidia, which is again one of the most valuable companies that's publicly traded, that's going to be reporting earnings. So please make sure that you write that in your calendar so you are not surprised. We also have, which is not going to be listed here, we also have SMCI. SMCI has to report by February 25th, which is, if I'm not mistaken, going to be Tuesday. Its actual earning report that it didn't report on time. That will determine if SMCI either continues to gap up or if it begins to recover. We'll talk about it in just a little bit, but just to express how much there is to talk about. So let me go through the list of stocks that have aggressively pulled back just last week. The first one is Carvana, CVNA. CVNA, just like I talked about it earlier last week, has been incredibly bullish and in my opinion was incredibly overvalued. It's like finally happening where, don't get me wrong, most of the market did pull on back last week. So if I pull up QQQ, we could see a nice little retracement on QQQ. Percent-wise from overall highs to current lows, it's about almost a 3% pullback, about 2.9%. Nonetheless, the markets did pull on back, but nothing in comparison to what I would say the new form of meme stocks. Carvana, HIMS, PLTR, TEM, MSTR, this meme stock movement of these decent or somewhat decent companies have just been incredibly overinflated. They're overpriced, overvalued, and they're overhyped up. And it looks like it's finally beginning to fall apart. But the thing that I want to remind you is that the last two times, not including this time, but the last two times during the tariff war between Mexico and Canada, and as well as the DeepSeek news where we had these flash crashes, do you guys remember that? Both of the times that we saw these flash crashes, the market recovered. The flash crashes, the market recovered. So I just want to remind you of that we can talk, and you guys have seen that I've been pretty bearish overall as markets are at all-time highs. Inflation is beginning to rise. There's obviously concerns about how the US is actually doing, but nonetheless, if market sentiment is still bullish, we can't be surprised if markets just begin to recover. And that's what I want to make sure you understand. I am going to be talking crap on a lot of what I view to be overhyped up piece of crap companies, right? Some more than others. But nonetheless, there is no question that if hype is still present, a lot of them can still recover as markets are still bullish. That's not an opinion, that's a fact. Again, a lot of these companies have sold off and then still recovered ultimately because the hype is still in their favor. Being bullish doesn't mean that the company is successful for a long period of time, just like GameStop. And I know a lot of you guys hate that comparison, but it's true. If hype is present, just like when GameStop's hype was present, all it took was a tweet from Roaring Kitty to send that stock skyrocketing. It wasn't that it was a successful company. It wasn't that it was doing extremely well. All it was is that, again, a bunch of idiots come together enough to actually push the stock to new highs. And that's kind of what it's almost been. Don't get me wrong. These stocks are not as terrible, at least not all of them, only MSTR. And of course, I have to talk crap on MSTR itself because MSTR has no actual successful business. So that's very similar to GameStop and to AMC. But the rest of these companies like Palantir, they are very well ran, successful companies, but they're just incredibly overpriced. So the question is now a good time to buy them, or is this the beginning of the end? And I just wanted to highlight them for you. So the first one is going to be Carvana. Carvana, and again, you guys can feel free to decide. It went from $3.55 all the way to highs of nearly $300 per share. It reported earnings, and its earnings were not bad. Feel free to look it up. Earnings were actually good, but if I'm not mistaken, their net profit for quarter over quarter was not actually growing. So their profit or net margins actually slimmed a little bit. But guess what? That doesn't seem to be too terrible of news because, again, overall, the company performed very well. But this stock dropped 23%. Why such an overreaction? Again, very simple. This is where you can't be surprised. The reason that there was such an aggressive sell-off on Carvana was that it never belonged at $300 per share. So therefore, any negative news really begins to make the whole company fall apart at that type of valuation. For those that don't understand what I'm talking about, very quickly, we can jump into Investing Pro, pull up CVNA, and very quickly it lists for me oh, I already have it pulled up. It lists for me the PE ratio. The PE ratio that it's trading at 2,100 times its earnings. This is a company that makes $45 million a year in net income, yet it was trading at a market cap of over $52 billion. Again, what the company produces versus what the company is currently valued at does not match up. And this is where the overhyped and overvaluation comes in. But again, if hype returns, if markets resume to being bullish, then you can't put it past possibly Carvana that it could establish a support and begin to recover. And this is why I like talking about both sides, because again, it is narrow-minded for someone to think that all it can do is crash or that all it should do is continue to skyrocket. Remember, there's two sides to every opportunity. And if you don't explore both, then you're simply putting yourself in an unfavorable position and likely to fail, again, because all it takes is one bad trade to wipe out all the gains that you've made. So on the 4-hour time frame, you can see that's a substantial pullback. And I wanted to make sure that we talked about it because if it does find its support and it does begin to recover, I don't care if I'm bearish, right? That doesn't matter to a lot of the people that watch my videos. Who cares about what my like perspective of the market is? Because markets are bullish, right? And I'm here to make money just like you guys are. So if Carvana does find a support, if markets do find a support and market sentiment resumes to being bullish, this thing offers 30% of potential upside. That's huge. So why not talk about it, right? Again, I'm not saying that it has to recover. All I'm saying is that as of right now, market sentiment recently for the past week has been a little bit more on the bear side. We will see if it resumes back to being bullish as it has done the past 2 weeks when the DeepSeek news came out or the tariff news comes out. But remember, if any more tariff news or any more negative news comes out, it can act as a further negative catalyst. So understand that those factors, right? This is why the Federal Reserve says that they take things meeting by meetings. When it comes down to the way that I like to trade is I like to take it day by day, week by week, because what is a present issue today might not be a present issue next week, or vice versa. Something might present itself that wasn't already factored in the week prior. So again, it's just very important to note. This is the one that I'm very excited about. Again, this was one of the best performing stocks of 2025. HIMS stock, again, a lot of people are incredibly bullish on it. You're an adult, you can do whatever it is that you want. You don't need to prove yourself to me in the comment section for me to agree. There's a lot of different ways on how to make money in this market. We don't need to see eye to eye in every single stock. I think it's an absolute pump and dump, right? I don't think it's a terrible company. I just think it's overvalued. But I like to talk shit on it, so I like to compare it to GME, and the bag holders get triggered. But nonetheless, again, if this was such a consistent and stable company, it would have not sold off 30%. Very simple. I don't care about your opinion. Your opinion does not matter. Numbers don't lie. This company lost nearly 1/3 of its value within 24 to 48 hours. That is not normal. So, and if you look into why this happened, it was a specific area that was curating a lot of demand for the company because there was some form of shortage in Ozempic. That shortage is there no longer. So therefore, the demand for him should naturally begin to fall. And you might be saying, well, hey, I heard that that is less than 10% of HIMS's business. I agree. But remember, like what I said, it doesn't take much to create a company that's overhyped up to begin to fall apart when, again, it doesn't look perfect. And now it doesn't look perfect. Demand might begin to shift, which is, again, we saw it with HIMS because of that news of the Ozempic shortage. The FDA said that it is no longer. So therefore, people can go back to purchasing that part of, or no longer need that part of HIMS, which again should bring down overall demand. But again, if markets begin to recover and you think that this thing is going to continue to skyrocket because, again, it's a meme stock, there's a lot of hype behind it, I'm all for making money. I'm not against that. All I'm here to remind you is understand that at these levels, when it's incredibly overhyped up and incredibly overpriced, it's not sustainable, meaning that in the long term, it probably won't hold at 80 or 90 or even $70 per share. It's a pump. And while the pump is and hype is present, it can be successful, but eventually it all comes crashing down because it never belonged there. So just do your part in taking advantage of the opportunity, making that money and bouncing, right? Because there is a lot of recovery potential. If this thing begins to recover back to $70 per share, about 47%. And the downside risk, someone asked me in the comment section, not asked me, they're like, I can't believe you're talking crap about HIMS. You know, this thing is going to, what do you say? This thing's going to like $500 per share. Again, people like pull numbers out of their behind, right? There's nothing that supports the case that HIMS is worth anything north of $100, even with what it's currently trading at. It's just not there. Profit-wise, right? The company is doing well. Don't get me wrong. The company is being ran well. It's just not there. And especially with this new news of the Ozempic shortage being no longer, there's huge pullback potential because that hype and that demand will no longer be there. So I still think that there's 40% of potential downside, almost 50%. I think this thing can go all the way back down to $20 to $30 per share. No question about it. But it's all about market condition. If markets resume to being bullish, then it gives HIMS the environment to continue to pump. If markets continue to be bearish, then again, these hyped up companies are the ones that get affected the most in a negative way because they never belonged up there. So then when fear begins to be installed, reality begins to sink in. Just like when our economy begins to struggle, everyone dumps their meme coins, their shit coins, and their NFTs because no one cares about your pixelated picture, right? In reality, no one actually cares. That's a luxury. That's a type of industry or niche in the market that succeeds when a ton of people have a ton of money. But it doesn't have the environment to succeed when people are struggling. So that's the same thing that I view when it comes down to HIMS and PLTR and Carvana and TEM. All these BS wannabe AI companies that try to shove it down your throat of, look at all we're doing in AI, and yet no one really knows what it is that they do. Altogether, again, please be mindful of overbought and oversold levels. There's nothing wrong with wanting to be invested in what you see to be the future, but you should never have to overpay because you want to jump into the hype that, again, tends to be short-lived. So that's for HIMS, right? We talked about the pullback potential, we talked about the recovery potential, and we talked about why it's sold off. I also want to make sure that you're aware that it reports earnings after the market closes this Monday. So it's going to be very interesting to see that, hey, does it exceed expectation and begin to recover? Or is it going to be like Carvana? It got pumped, it reports earnings, it reports good earnings, but yet it's still sold off because it's just not what the market expected. We'll see to find out. I can't predict the future. I'm not going to pretend like I can. We're here to watch the market react. The next one is Palantir. Palantir went from highs of $125 all the way down to lows of $100 per share. Again, a super successful company that isn't overvalued, does not sell off and crash 25% in just 48 hours. It just doesn't happen. This happens because the company was overvalued. So when you hear the news about the CEO possibly selling $1 billion worth of his stock, and then on top of that, the possible Defense Department, trimming down on their budget, it begins to make this like perfect stock not look so perfect anymore. Remember, one small piece of the puzzle begins to fall apart and it all starts crumbling down. It's just really funny that all of these stocks began to fall apart all within the same week. And it's almost like we've been waiting for this, right? We can't predict the future, but we can always prepare for it. Palantir is one of the only ones out of all the companies that I'm talking about today that I do see that it has the environment to potentially succeed. It is a well-run company, it is a cash-rich company, and it is growing quarter over quarter and year after year. I still do not believe that it should be trading at $100 or $120 per share. It is incredibly overvalued, and even Palantir investors will tell you that. But nonetheless, as long as market conditions are bullish, it gives Palantir the environment to do well and to continue to push until that sentiment changes. And if the entire markets begin to fall, then again, it's the most hyped up stocks that then fall the hardest because they never belonged there. So just be mindful of that. If you're willing to take the risk and you can tolerate it, then be my guest. But you can't be surprised if you want to take advantage of an incredibly overpriced stock that has been incredibly bullish, and then all of a sudden market sentiment begins to turn and it turns against you, then you're like, oh, what the heck? This is not fair. Well, yes, it is, because you knew exactly what you were getting yourself into. And if you didn't, then you just didn't do enough DD, right? So Palantir, again, it is a well-run company. It does have a lot of money on its balance sheets. It's going to be very interesting to see. I don't know if you guys saw that 55 million of the 77 million profit that it made, 55 million of that was actually off of the interest from its $5.2 billion. So again, the company, in my opinion, there's holes in it. Like, it doesn't actually make a lot of money. But again, nonetheless, the hype is present. I don't want to be a complete Debbie Downer. This thing is a very bullish stock. And if the market gives it the environment to succeed, then great. There's a lot of recovery potential. We can see from where we're at right now. If it does recover to previous highs, 25%. I think that's obviously, this is why we're having this conversation. It's something to talk about. If it actually does find a support and begin to recover, if things get worse before they get better, a pullback to the moving average is 13%. Pullback to $60 per share is 35%. Again, things can get very bad very quickly when stocks are trading far above what they should be actually trading at. I think if I'm not mistaken, this thing was trading at PE ratio of 500, if I'm not mistaken. 514 times its earnings. And again, you guys can always check out Investing Pro. I think it's going to be the first link in the description down below if you ever want to use it for your own analysis as well. The next one is going to be TEM. Tempus AI. This one I will speak just as bad as I think people need to talk about it. This is a bullshit company. It's an absolute crap AI company. No one knows exactly what it is that they do. They just are invested in it because Nancy Pelosi did. She was the positive catalyst. This is, in my opinion, the most notorious pump and dump bullshit AI company that there has been in a really long time. It went from $30 per share to highs of 91, not because anything changed fundamentally, but simply because Nancy Pelosi purchased and then everyone else followed. You can have your own opinion. I have mine, and that's why I'm here to share it. Again, from $90 per share, $91 per share, it has retraced to lows of 68, losing 25% of its value. Again, not a normal retracement. And there is so much more for a potential pullback. It wouldn't surprise me that if this thing continues to fall below $60 per share, you're going to begin to see a lot of the institutions, a lot of the big holders begin to submit that they have liquidated their position in TEM because they understand that the pump is over. Please learn how to see the red flags with these bullshit AI companies. Don't be afraid to take advantage of the opportunity if you can manage that kind of trade, right? It's a momentum play. But as soon as the hype begins to fade and reality begins to sink in, we know it's a bullshit company. Like, why pretend that it's not? People are so focused on convincing themselves that this form of AI is the future. No, don't get me wrong. I think AI, we are barely scratching the surface, and there will be companies that are going to be super successful that are just based off of AI. Tempus AI won't be one of them, right? It's one that no one really understands what it is that they do, and it's just another AI company that's being shoved down your throat of, hey, invest in us. Tempus AI, complete pump and dump, huge pullback potential, and this is one that I'm super excited to continue to short as it continues to fall. Now, again, if markets do begin to recover, it does give this thing the environment to recover, so just be mindful of that. It doesn't have to continue to sell off. This is the one that I just view the riskiest out of all of them, out of Carvana, out of HIMS, out of Palantir, out of even kind of like MSTR. Tempus AI is the one that I view to be the most risky because of how there's nothing actually fundamentally pushing this stock up. It's all just based off of Nancy Pelosi purchase, and I see that to be a huge red flag. It's the roaring kitty setup all over again. And then the last one, again, I didn't really have to talk about this one, but I can't talk bad about stocks without talking bad about MSTR. MSTR is a super shitty company. It went from highs of $548 per share, now trading at lows of sub 300, so now trading at 299. We've said it once, we'll say it again. If you want to invest in Bitcoin, invest in Bitcoin. Do not invest in a company that dilutes your shares by them being able to borrow against your shares at 0% interest, continuing to dilute you, and all you do is lose more money, right? There, at this point, hasn't been anyone that's purchased MSTR in the past, 94 days that is up on their position. Not one person. If you look at it, we're nearly at There's people that maybe purchased at 280, but those are the only people, and they're up probably like 3 or 4%. Other than that, everyone else, think about that. Everyone else that has purchased MSTR in the past 90 days is down on their position. MSTR is a worthless company. And just like in the past, when it pumped up to highs of, 130 during the Bitcoin rally back in 2021, and then Bitcoin came crashing down, and then so did MSTR. MSTR crashed again when Bitcoin did, and it went down to $15 to $13 per share. Again, I see MSTR to be ready to do the same thing. Look at that. As soon as Bitcoin begins to fall, MSTR, in my opinion, is going right back down to $30 per share. I think it's one of the most terrible companies out there. I think we'll be hearing a lot about Michael Saylor once this thing begins to crash. And I believe that he is right now viewed as this like Bitcoin, I don't even know what you want to like, because he owns the most Bitcoin. I think he will hurt the crypto space more than he will help it. And it will be all of his fault because of how over leveraged he is. And if his company goes under, what a negative influence it will have in the entire Bitcoin and crypto space. Just like we saw with FTX and Sam Bankman, it just takes one individual, again, a big domino, to fall for the rest of the market and industry to tumble. And I just think it's very unfortunate. I'm not a huge supporter of crypto regardless, but nonetheless, when you see something like this, it's such easy money. Like, we've made so much money shorting MSTR from highs of $500 per share down to lows of 300. We close our shorts every single day. We do everything that bag holders do not. We enter and we exit, we take our profits and we bounce. We're not greedy. We enter in a calculated way. We respect overbought and oversold levels. And again, as long as direction is in our favor, we know that there's money to be made shorting MSTR because all it ever does is continuously sell off. And they continue to believe that MSTR is the ultimate money glitch. And I do agree. It has been the ultimate money glitch for our team because we've been making so much money shorting it. And I want to thank you, all of you bag holders that bought it at $300, $400, $500 per share. Again, for contributing so much. I'm about to take a trip to Europe, and it was all funded because of my MSTR shorts. So again, I really do appreciate it. Other than that, again, I love being super petty to the MSTR people because it's the funniest thing ever. So I'm very excited to see how this week plays out. We have earnings. We have SMCI when it comes down to them reporting their actual earnings to see if they're going to continue to push or if it fails to report on time, which is February 25th. And then if we see a huge retracement. So again, if you ever have any questions, feel free to reach out. All the links are down in the description. If you ever want to watch me trade live, feel free to watch me trade live as soon as Monday. And that's that second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.